Howdy, Jacob here. Today we're looking at Central Puerto, ticker symbol CEPU, in the independent power and renewable electricity producers industry. 1.8 billion market cap on 2.1 billion enterprise value, founded in 1898, based out of Buenos Aires, Argentina. Growth is Revenue is all over the place. The last 2 years have dropped about 50%. 2021 had 3.4 billion in revenue, now to under a billion. So very interesting stuff going on here. Operating margin of 21% is pretty substantial, quite a bit down from what it was prior. But I mean, a market cap of 1.8 and just last year, 2 years ago, they had an operating profit of 1.4. So interesting things going on. They're currently paying a dividend of 10%. That is crazy. Um, Dividends all over the place. I mean, this will just be an interesting company review because these historical figures are all over the place, which you don't really see often, especially for a company founded in 1898. It might have to do with something in Argentina that I'm not entirely aware of. But if we look at shares are actually down from 10 years ago, relatively flat over the last 8 years, though, so not much going on there. For free, the balance sheet has about $280 million of cash-like products, 135 short-term debt, about 800 million long-term debt. So they do have a little bit of net debt here. If we look at that 800 million in relation to free cash flow, 800 million, and again, similar to what we've seen before, everything is all over the place. It's very difficult to say what exactly is going on here. I mean, for some reason, their capex is going down pretty substantially. I don't really know how that's possible unless they're selling off things, but they're making net acquisitions here. So I'm a bit confused by what I'm seeing. The 61 million in dividends is nothing in relation to their free cash flow, so they can definitely afford that. Um, yeah, this is just a very interesting historical figures that I'm seeing. So I'm going to be weighting everything on averages here. I'm going to be weighting on the conservative end. I think for revenue growth, I have no idea what to expect. So I'll just do no growth, 10p. Maybe I want to look at the business. Um, that's really all over the place here. Let's do 25 and 30% for margins. No share change. I mean, they haven't been doing any share changes, not really any stock-based compensation. The dividend, I mean, it looks like they can afford it. So this might be a company that's just so crazy. It looks pretty cheap from what I'm seeing. I question whether these margins are really possible. It is in Argentina, so this would be something, even if I did an in-depth review on, I understood the business a little bit more. This could be something that, you might just do a deeper dive, may not be comfortable with the figures and not trust them, but um, I guess I'll be doing a deeper dive here shortly and better understanding how these numbers work. Because right now, I mean, no percent revenue growth with a 10 PE. I mean, it's really just because their dividend at 10% seems very reasonably priced out, and whether that's the case or not is just interesting. So, either way, I do hope you enjoy the video. I'll try to do a deeper dive on this shortly. And I hope you have a great rest of your day. Thank you.